Chinese domestic growth and those Chinese companies that sell domestically, or is it the Chinese company that sells to the rest of the world?
So we do both. We see huge continued demand from the Chinese domestic consumer, and so we're investing in that kind of what we'd call kind of consumption downgrade and reshoring of domestic behavior. And so that includes domestic brands, so domestic cosmetics brands, domestic quick service restaurants, domestic FMCG brands, but also that includes domestic travel and other things that are benefiting from people staying home rather than going abroad. Then, of course, we invest in those cross-border players, both that are integrated on the hardware side, like the BYDs of the world, as well as those that are that I mentioned previously, the likes of Temu and their parent company Pinduoduo, which is doing incredibly well.
Well, but tell me about your cap raise, your fundraising. $8 million in assets doesn't seem like a lot of money under management. So talk to me. You know, we talked last time in February. What kind of flow are you getting in terms of assets? Because it does feel like investors are pretty tentative still.
So again, you know, our background is on the private side where we manage over $2 billion. So certainly by our standards, this is a small AUM as well. I think it is largely driven by American sentiment towards China and particularly global sentiment of folks that would invest in ETFs. And I think we're starting to now see that our ETF, you know, for one of the months of this year already beat the S&P. It's beating all the other kind of China ETFs since its launch as well. And so, but we've still got to see that kind of investor sentiment towards China. And I think that's less about geopolitics and more about returns. If I was an investor today, I would have kept my money closer to home because the NASDAQ and NYSE have been ripping. And there's no reason not to continue to do that because all the geopolitical noise is irrelevant if the returns are there. And so our belief is that as we're starting to see these markets bottoming, and you finally saw a lot of that capital was flowing to Japan and elsewhere, finally coming back into China, coming back into Hong Kong, I think that rising tide will lift all boats. And then we really like our head-to-head chances against the other China ETFs because we're actively managed, and we also try to filter out, you know, geopolitical risk or threats to American national security.
Hey, Ben, China, Carol just mentioned the idea that China, you know, quote unquote, uninvestable. It's a question that we've been asking for a couple of years now, since a prominent bank brought it up a few years ago. And even at Milken this year, one of the panels, one of the panelists was asked, I think it was the CEO of Capital Group, was asked if China is uninvestable right now. What would you say to somebody who argues with you and says, you know what, given the geopolitical concerns, given the domestic concerns, given what's happening with the government there, I don't believe that China's investable. What would you say to that person?
The numbers would tell you that's not the case, right? So the numbers would tell you that China's growing at about double the pace of the United States. If you're interested in other emerging markets, let's say Southeast Asia, which you guys mentioned earlier on the program, China's in the process of urbanizing people from rural communities and second, third tier cities to the first tier cities. That urbanization alone will generate a customer base that's 2 times the size of Indonesia.
Ben, sorry, I want to jump in real quick because we only have 30 seconds left. Does that growth number even matter if the government can intervene at the drop of a hat?
The government had made changes over the last few years that were more to defend against what they believed were antitrust or other monopolistic actions by large Chinese technology companies. But overall, the Chinese government is still very much growth friendly and has now turned all of its attention on improving global investor confidence in its public markets.
All right, we're going to leave it there. Hey, listen, thanks so much. And again, thanks. We know it's wee hours there in China, so we appreciate you getting up for us. Ben Harburg, founder and portfolio manager at Core Values Alpha, joining us from Beijing. As we mentioned, the Core Values Alpha Great China Growth ETF, about $8 million in total assets. It's up about 6% so far here in 2024. All
right, well, speaking of things that are higher today, the Dow Jones Industrial Average higher by 0.3%, let's say 100 points to the upside right now. S&P 500 up 0.1%. While the NASDAQ still down 0.1%.
It's been an uptrend in stocks this month. We'll have more on the momentum. Options Insight is coming up next, right here on Bloomberg Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. McDonald's is looking to launch a $5 meal deal in the U.S. The burger chain is betting could lure penny-pinching consumers back in. A source says this deal could include a McChicken or McDouble, along with fries and a drink. On the company's first quarter earnings call, CEO Chris Kemczynski said McDonald's had to be laser-focused on affordability, given how price-weary diners have become. McDonald's up today by 2%. Sweetgreen shares are surging after the salad chain increased its annual sales projection and cited improving profitability as it seeks to expand its footprint. The company now anticipates same-store sales growth of as much as 6%, up from a prior expectation of 5% at most. Sweetgreen shares, they are surging today by 32.5%. We're keeping an eye on Zeekr Intelligent Technology Holding. That is the high-end electric car brand under Geely Holding Group. Those shares are pushing higher. Went out this morning at $26. Right now up by 27%. Shares of Zeekr, first day out, they are advancing. Elon Musk is touting plans to expand Tesla's supercharger network just a week after firing almost all of the roughly 500 people who ran the business. On X, On X, the social network he owns, he said Tesla will spend over $500 million on its growing network this year. Ford has promoted Chief Financial Officer John Lawler to Vice Chair to oversee the automaker's long-term strategy, bolstering its executive ranks as the company works to staunch billions of dollars in losses in its electric vehicle unit. Ford shares today lower by 1%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, the S&P 500 heading toward its third straight week of gains, longest winning streak since February. Well, let's get more on today's trade. Options Insight with Bloomberg News Chief Markets Correspondent Abigail Doolittle, it's been a long week, Abigail Doolittle, and Spencer Hakimian of Tulu Capital Management joining us right now. Abigail, over to you.
Thanks so much, Carol. And we are actually going to take a look at gold, Spencer, instead of the S&P 500. And speaking of a rally, since the October lows of last year, up more than 30%. Do you think that it can continue?
Look, right now we're living in a world where there are sovereign and non-sovereign state actors shooting missiles at one another. Core inflation in the U.S. has gotten sticky somewhere between 3 and 4%. And just last week, the G7 had announced that they're considering freezing and potentially even selling Russian dollar and euro reserve assets. So in terms of bull cases for gold, I think they're plentiful. In light of that, we bought a June 2025 call option for gold at a strike price of $27.50, which is currently about 15% out of the money. And let's just say that that rally were to continue, and let's say we get to 2,500 by Labor Day, that's about 5% above the spot price. That option we just spoke about would be up 80% from our basis. So could the rally continue? We think it could. And if it does, we would rather express that via an option rather than buying the spot price, because we think if it were to continue, it would happen quickly rather than,
Yeah, well, it's interesting because just taking a look at the technicals on gold, I mean, this rally has really been pretty incredible. And it appears as though maybe there could be some consolidation. Or on the other hand, if we make it past the last high, which I think was 24.31, it looks like it could shoot up to your level like almost immediately, which is pretty incredible. A lot of people talking about the factors you're talking about. But then on the other hand, if the Fed were to cut, then you would almost have that dovish element. So gold sort of in the sweet spot. Are there any other ways to express your views in gold?
Yeah, I'll just take it back for 1 second briefly. Is this trade a guarantee? No, of course it's not. Nothing in capital markets is a guarantee. But because there is that scenario where we could have an inflationary risk-off event where treasuries might not be the perfect hedge, we just believe that it's worth putting on, 2, 3, 4% of a book of risk onto a trade like that, because if it were to work, it would be outsized, and if it was not to work, a 2, 3, 4% loss is very manageable and should hopefully be, the rest of the book should hopefully go up to offset that loss. But yeah, if you just want to, you could also just outright own spot price of gold, which is not the worst thing because it's obviously, it's obviously less upside, but, if it won't expire worthless, options do expire worthless if they're out of the money. So we think you can also just buy it straight up if you want to, too.
Well, it sounds like options, your option trade is a good way for a hedge. It sounds that's how you're playing it. And that dollar chart in a range, hard to understand. It's going to be very interesting to see what happens next with gold. Spencer Haikimian of Tulu Capital, thanks so much for joining us for Options Insight today. And Carol, Tim, back to you.
All right, great stuff. Abigail Doolittle, thank you so much. All right, folks, that's going to do it for our first hour of Bloomberg Business Week. Hey, coming up next, if you're going to stay with television, the close is coming your way, so be sure to check that out. If you're staying with us on radio, YouTube, and Bloomberg Originals, Bloomberg Business Week continuing, we're going to talk a little bit about wind farms in New Jersey. We're going to talk about the Super Bowl of the flower industry. And one of our most read stories on the Bloomberg has to do with something that happened at Milken.
Yeah, that's all I'm going to give away right now, but this is the most
It's a name
read
you'll know.
story.
It's a name you'll
It's
know.
a name you'll know. A name you'll know well from over the last few months. And a really important story, too, by our own Simone Foxman. So we look forward to her joining us as well.
And a new work of fiction on what if Russia had chosen a different path forward. We're going to get into that. A fascinating new book by a New York Times bestselling author. All to come in the next 2 hours of Bloomberg Business Week. I'm Carol Massar, along with Tim Stanovic, and this is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stanovic on Bloomberg Radio.
All right, everybody, we've been saying it a million times here on Bloomberg. We're just about 1 hour away from the closing bell, but the S&P kind of running out of steam, running out of energy, but we are still on track for a pretty bullish week here, Tim.
Yeah, third week in a row
Yeah.
of gains for the S&P 500. If it holds, which, I'm not a betting man, but if I were, it looks like it will.
Well, and as Abigail mentioned, Abigail Doolittle, who we just talked with, and she just did a segment as well, but that 5,200 level, if we hold it going into the weekend, pretty significant. So we'll see what happens in the next 60 minutes. Having said that, I'm Carol Massar. He's Tim Stanovic. We are Bloomberg Business Week across multiple platforms here at Bloomberg, and we are going to get into my home state, the Garden State of New Jersey. A lot of nicknames, but a lot of them not on the good side. But there is something good that's happening.
Yeah, I'm going to stay on your
We're
good side.
not just about the turnpike, everybody.
I'm going to stay on your good side, so I'm not going to
Good.
mention any of those other nicknames. It does want to be known, though, as the Hollywood of the East. So we're going to check in with the person responsible for economic development for the state.
Yeah, I find that fascinating in terms of what's going on. Speaking of economic development, a check on small business ahead of Mother's Day. We've got Christina Stembel of Farm Girl Flour. She is back with us.
And it is the most read story on the Bloomberg terminal today. Behind closed doors at Milken, somebody got scolded on DEI. I'm not going to tell you who it is.
Again, you'll know exactly who it is. And then what could have been in Russia. This by an author who has written a lot. New York Times bestselling author, often talks about business and management. But he's got a new novel out. He wrote it decades ago, but it says a lot about maybe where Russia was at the time and what it could have been and why we've gone kind of in a different direction. So a lot coming in the next 2 hours.
Yeah, all that and more. First up, though, we're checking the day's trade and top business stories. Here's Charlie Pellet.
Hey, thank you very much. We got 58 minutes to go ahead of the closing bell. Stocks are higher. The Dow, the S&P, they are both in the green. NASDAQ, though, in the red right now. NASDAQ a 12-point loss, down by about 1/10%. S&P up 6, gain of 1/10%. The Dow up 98, up by 0.3%. 10-year 4.50%. The 2-year 4.86%. Spot gold today is advancing. Right now, we do have an ounce of gold trading higher by $20 the ounce, up 0.9%. West Texas Intermediate crude down 1.2%, 78.27 a barrel. We've got the S&P, as I mentioned, advancing by 0.6%. Federal Reserve Governor Michelle Bowman says she does not expect it will be appropriate for the Fed to cut interest rates this year, pointing to persistent inflation in the first several months of the year. Well, next week we do get the CPI report. Constance Hunter is senior advisor to Macro Policy Perspectives.
We are definitely in the disinflationary trend camp, but the other thing that is an important factor factor for the Fed is which is going to show weakness first. Is it going to be the labor market, or is it going to be the month-over-month change in CPI?
Constance Hunter of Macro Policy Perspectives. Novavax shares are surging today, up by almost 100% after the company signed a $1.2 billion licensing agreement with Sanofi that includes commercializing a combined COVID-19 and flu shot. Right now, Novavax up by 94%. Again, recapping stocks higher, S&P up 7, up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Go out to some Jersey spot, and whether you're hip or not, the Jersey bounce will make you
Well, New Jersey is known for a lot of things. I think it's fair to say the best tomatoes in the nation. Is that true?
Horse farms, incredible beaches, great public education in some areas.
Bruce Springsteen,
And I was born there.
the Jersey Shore,
I was born there.
Bell Labs, and
A lot of stuff.
Carol Masters' home state.
Yes, indeed.
Our next guest, though, wants to make it known for even more, including the Hollywood of the East, as well as an exemplar for clean energy. We got with us Tim Sullivan, CEO of the New Jersey Economic Development Authority, also known as NJEDA. It's the agency responsible for driving economic growth and development and to create jobs in the Garden State. Tim here in the Bloomberg Interactive Brokers studio. Welcome. How are you?
I'm doing great. Thanks so much for having me over.
Well, thanks for joining us here.
And we should say, just full disclosure, you actually worked with Mike Bloomberg, right?
Four is a better word for it.
Okay.
He was the mayor and I was on the staff. But yeah, it was a great career highlight to be part of the mayor's team.
So from City Hall in New York to Connecticut, then to the state of New Jersey.
Back to my home state. When Governor Murphy became governor, I got elected in late 2017. I got a chance to come home and work for the home team. Yeah.
So talk to us about not just the biggest challenge when it comes to economic development, but what you see as the biggest opportunity for the state of New Jersey when it comes to economic development.
Yeah, Governor Murphy sees huge opportunities in front of us. You mentioned a couple in the intro, film and TV for sure, clean energy and offshore wind, AI and what that means for New Jersey and what that means for the world. Those are three, huge opportunities that we're attacking pretty aggressively.
I think it's really interesting. New Jersey has also been known, big time for the pharmaceutical industry, but I do feel like a reboot is kind of needed and necessary. Tell us how you see it. Give us the backdrop of what's been going on in terms of economic development in New Jersey and kind of what needs to be done and how you're hoping to change it.
Yeah, one of the big priorities for Governor Murphy is economic diversification. So, pharma and life sciences is still a huge calling card for us. We're home to a huge concentration of, global headquarters and U.S. headquarters for big multinational pharma companies. And we've seen a huge continued surge in that industry, but we want to diversify as well. So film and TV is a great example of that. The motion picture camera was invented by Thomas Edison in New Jersey. Fort Lee was Hollywood before there was Hollywood. We're trying to win it back, and we're not alone in that journey. So Netflix is committed to building a $1 billion production facility in Monmouth County at the old Fort Monmouth. We just announced plans to see another major facility built in Bayonne. There's a developer that's going to build a product called 1888 Studios. 1888 was when Thomas Edison invented the motion picture camera. Yeah. So it's a bit of a nod to our history. And then in the south ward of Newark, right by Newark Airport, is another product by Lionsgate to develop a world-class studio as well. So we're on the cusp of something big, we think.
I was just at Newark Airport early this morning.
No.
So were you.
Yeah, me too. It was a little quiet.
It was a little quiet. Not as quiet when I was there. There was actually a lot of traffic coming into the city when I came in.
Well, that's because everybody was going to work.
Yes, exactly.
Tim, one thing I want to ask, what is taken? I remember early in my career doing a piece about, does it really pay to develop kind of movie entertainment, that industry? Because the tax breaks that are often necessary to bring the business in. Tell us about the business model there.
Yeah, we see huge upside here. It does absolutely require upfront investment. We have a tax credit program that Governor Murphy brought back, which we think is a combination of the most competitive and most progressive. So it does things like awards and rewards diversity, both in front of and behind the camera. But the returns we see on the job side. So, we're going to see, and particularly our incentive program, and this is something Governor Murphy has spent a lot of time making sure we're emphasizing, is encouraging brick and mortar construction, because that's how you're going to get development of facilities that are going to be full all the time. So Netflix is going to build this $1 billion facility. They're going to keep that thing humming. That means lots of permanent jobs, not in front of the camera per se.
It's not just a case of bringing a movie in for 6 months and then having them go.
Correct. Those are permanent careers, and that's not just that's in film production, but that's in hair and makeup, that's in craft services, that's in carpentry and electrician work, and all that. Overwhelmingly union jobs as well. So we see huge upside there.
How do you make sure that it's not a race to the bottom, because you're competing with not just New York, which is so close and also very well known when it comes to entertainment. You have big stuff happening in Queens and Brooklyn right now when it comes to this type of stuff, Silver Cup Studios, for example. And then also in Canada,
which is just a huge place for filming movies and TV shows right now. How do you make sure that the incentives that you're offering in the long run are actually beneficial rather than taxing New Jersey?
Yeah, the returns we think we're going to see are significant on the job side. So the permanent jobs that we hope to see be built, and the construction jobs we'll see in the development of these facilities as well. We also see an opportunity to take share from other places as well.
But those jobs don't necessarily lead to economic development if nobody comes and uses those studios.
Oh, sure. Yeah, no, we think
that's what I mean. Like you're competing for every moment there.
Absolutely, but that's why having a partnership with someone like Netflix, who is going to build and develop their own studio and presumably going to keep it full with their own stuff, and they're they're certainly a partner we're thrilled to be betting on, because we think they're one of, if not the leaders of the streaming kind of revolution and the winners of the streaming wars and all that, and so we see huge permanent job creation opportunities, and then also there's we will continue to have to be on our front foot and be competitive on the tax credit side. Our program, one of the things that's important about our program is it's on the books until 2039. So from a predictability perspective, if you're particularly on the TV side, if you're a showrunner and you hope to do 4, 5, 6, 7, 8, 9, 10 seasons,
right,
which they're all hoping for, our program will be there for them. And
so they understand they have till 2039 that they get those benefits.
Yeah, absolutely, and that's an important part of our marketing.
How quickly do the benefits, though? Okay, so there's the benefit outlay. Mm-hmm. How quickly does the kind of payback come to the state of New Jersey?
Payback happens almost right away. That's one of the exciting things about film and TV. You have a movie, even if it is just coming for a couple months to shoot. There's a movie shooting right now that's a pretty high-profile movie that's shooting all throughout the state. They're spending a lot of money. They eat a lot of pizza. They do a lot of dry cleaning.
Which movie is this?
It's called A Complete Unknown.
Okay.
Timothy Chalamet's in it.
Okay.
It's a Bob Dylan biopic.
Yeah. They're also filming it in New York City.
They filmed a bit of it in New York City, but it's not that we're competitive, but it's more in Jersey than New York. Not that we're competitive.
It's always competitive.
We're really competitive.
Who really owns the statue? Let's just talk about
Statue of Liberty is a Jersey girl.
I know.
You can have an emotional argument some other way, but she lives in New Jersey.
You can't see this. Yes, you can.
No, I'm in favor of her being a Jersey girl.
I know, but it's like I got I'm surrounded by 2 New Jersey people right here, so
and a California guy.
Yeah, California guy.
Let's talk about alternative energy, renewables. Coming back from Milken, another big theme, and a lot of it has to do with artificial intelligence, all the data centers that are going to be needed to do all of that really kind of amped up computing necessary for AI, machine learning, if you will. A lot of investments going into the data centers, but tell us what the strategy is for New Jersey.
Well, around energy, our biggest initiative is offshore wind. New Jersey has a huge opportunity, and Governor Murphy has set the most aggressive target for offshore wind adoption in America in New Jersey. So we're going to hope to or plan to generate 11 gigawatts of power from off of our shores. That's enough to fuel or power every home and most businesses in New Jersey. So it's a huge incremental energy generation framework, and we're right now net importers of energy.
To power every home and business.
By the time it's enough power to.
How long does it take?
Until we hit that goal, probably 2035, 2040, somewhere in that range. The goal's 2035.
Okay.
And so that's contingent on the development of lots of wind farms over the next decade or two. Governor Murphy has provided all the resources we think these companies need to build these farms, these wind farms, including things like building a port in South Jersey to support the development of it.
What happens if former President Trump wins in November to the state's ambitions when it comes to wind? And here's why I ask. Our own Jen DeLuey's got a story out today about wind farmers bracing for Trump's next salvo as he visits the New Jersey shore. Former President Trump's vocal disdain for wind farms is another worry for developers who've faced high costs and supply chain woes. Former President Trump is going to hold a rally on the beach in Wildwood, New Jersey this weekend, a state that's become the front line for fights over the future of offshore wind.
Yeah, it'd be hard to argue that it'll be helpful to the wind industry. That being said, I think one of the things that we're encouraged by as we think about the future of offshore wind is the folks who are investing in offshore wind are actually the big global energy players. So we have a wind farm that's poised to start construction soon. That's backed. It's called Atlantic Shores. It's half owned by Shell. Right, that is not a fly-by-night concern, nor is it someone who's
it's got its permits, it's all ready
solely
to go.
Committed to clean energy.
Yeah, it's got its permits, it's all ready to go.
It has a few more permits to get through. Those will hopefully happen this year. And so, there's a huge amount of capital that wants to invest in offshore wind. And generally speaking, I think the country has not failed to figure out ways to harness energy that's been out there. This is an industry has been through fits and starts. It'll go through more fits and starts, but we think the 30, 50-year trajectory of this industry and the sector is too important strategically. Again, we're talking about controlling our energy future, not just as a state, but as a country. You're talking about tons of manufacturing jobs, talking about renewable energy and clean energy. There's too many reasons to care about this. So certainly one of the reasons I think our administration's a big fan of the Biden administration's approach on this is that he's all in on wind. We'll see what happens in November, but it's an industry that has been through challenges, and like any new industry that's capital intensive, regulatorily complex, it's going to go through fits and starts. But we think the long-term opportunity for New Jersey, for the Northeast, as far down as Virginia and the Carolinas, by the way, who are also pursuing offshore wind, is too big.
So could be some, starts and stops if we see someone else in the White House or if a turnover. But having said that, you're saying the longer term trends are in place. So even if there's a slow in permitting for wind farms in New Jersey, you're saying, Tim, that longer term, that's the push. You can see it happening.
Yeah, again, I think the rationale for energy independence, for the emissions framework, for the job creation and economic development impact, it's too big. There's too many reasons to like offshore wind to turn our back on it long term. And some of these wind farms that were just approved in New Jersey about 6 months ago are as far as 40 miles off the shore. So unless you have access to the Hubble telescope, you cannot see that from the shore.
I'm a sailor, and for the first time off of Long Island Sound, coming up like on Block Island, like to see them, I really haven't seen them in the past, and it was kind of interesting. I mean, they're way offshore.
They are.
And it's kind of interesting. But
Were they spinning?
They were spinning. I didn't get that close.
Yeah, I don't know if you want to get so close.
So
right?
from a distance, but it was like, what is that? And then you realize that those are wind farms out there, and you're
It's
seeing
clean
them really
energy,
pop
Carol.
over. Listen, I am full transparency. I'm all in on clean energy.
Hey, one thing that I wanted to ask you about, Tim, was congestion pricing, because it's a huge topic here in New York City. If you walk not too far from here, you'll actually see the infrastructure in place to charge commuters who come into the city in certain parts of it each day when that program is launched later this year. How do you think about that from a New Jersey economic development perspective? Because the governor has made no secret about his opposition to it. Does it affect your world at all?
Yeah, I think I would defer, those comments mostly to Governor Murphy, who's not been shy about his take on this. There's some active litigation underway that is not a good thing for me to comment on. I think it's certainly, it changes the framework of how people think. If it gets more expensive to go somewhere and do something, it gets harder to do it usually. And so, if you're a business in New York City that's thinking about, its customers, its suppliers, its trucks, we think it makes New Jersey all the more attractive.
That's interesting.
So I think it's, we'll see how this all plays out. But again, I think the governor's also been clear. He does not oppose congestion pricing, in any form. I think the way this was gone about has met with some concern from him and from our administration. But, he's not a hell no on all on congestion pricing. But I think the way this has been proposed, we think is detrimental to New Jersey from a health and other perspectives. But I think it's certainly, I don't think it's going to be a revolutionary impact on the economic development framework, and the competition between the usually friendly competition between New York and New Jersey and the tri-state area, but it's certainly probably it's a pebble on the scale on our side.
We started, we talked a little bit about, healthcare, pharmaceuticals. It's been such a backbone, I feel like, or an important part in terms of New Jersey when it comes to business development. What's new on that front, and what are you seeing? Whether it's AI, again, coming back from Milken and people talking about artificial intelligence, how it impacts things like drug development. So I'm just curious what you're seeing on that front.
Yeah, our momentum in life sciences is really good. Probably the best example of that is Kenvue, who just spun off.
It's Friday. You can say anything. We're open to anything.
They just were separated out, whatever the right word is, from Johnson & Johnson.
Spun off.
They did a global search for where they were going to put their headquarters. They chose Summit, New Jersey. We just did a groundbreaking for that new facility that they're going to develop out there. So that's a good example of momentum. So Band-Aids and Listerine isn't going anywhere from New Jersey. And then we've also seen, companies like Eisai out of Japan have made big commitments to New Jersey. Gilead out of the West Coast has built its East Coast headquarters in New Jersey. So not just the, Mercks and J&Js of the world, which we're thrilled to have continue to be headquartered in New Jersey, but lots of new companies choosing New Jersey.
Okay, you know where I'm going to go. We got 40 seconds here. Tim, you're a taxpayer in New Jersey. I'm a taxpayer in New Jersey. Any of these are they going to pay for themselves, or am I going to be looking at paying more taxes?
We think one of the keys, I think, to our long-term success in the state is growing the pie and having more revenue, coming into the state, more jobs, more employment, so that it only provides either the resources to invest in things we need to invest in, because we're still catching up from a period of underinvestment before Governor Murphy was governor, and things like infrastructure in our schools and our pension system. So we have some catch up to do there on the fiscal side. So I think we'll continue to plow forward on growing as best we can.
Are the taxes high,
That was
Carol?
not a no.
Are the taxes high
They
in
have
New Jersey
become
for you?
pretty high for
Okay.
me. Tim, this was great. We really covered a lot. Thank you so much. It was interesting. Tim Sullivan, Chief Executive Officer of the New Jersey Economic Development Authority, joining us here in our Bloomberg Interactive Broker studio. You are listening and watching Bloomberg Business Week. I'm Carol Masser, along with Tim Stanovic, and this is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long at Bloomberg. We've got stocks holding on to gains. 39 minutes to go now ahead of the closing bell. The Dow and the S&P, they're in the green. We've got NASDAQ trading lower. NASDAQ right now, little change, down just 6 points. The S&P higher by 9. That is a gain of 0.2%, while the Dow Jones Industrial Average is up 133 points, up now by about 0.3%. 10-year 4.50% with a 2-year 4.86%. Spot gold up $20 the ounce to $23.66. That is a gain of about 0.9%. A retreat for crude oil today. West Texas Intermediate crude down 1.1%, 78.37 a barrel. The University of Michigan reports its consumer sentiment index dropped to a 6-month low in early May. Anxiety is up regarding this year's renewed bout of inflation, as well as the employment outlook and household finances. Joanne Shu is the University of Michigan's Director of Surveys of Consumers.
So this is the first real downward movement we've seen in quite a bit of time. So I think it is jarring to people who watch the data, but it's not a plunge. It is a decline. It is a significant decline, but it's not a plunge.
Chu was interviewed this morning on Bloomberg Intelligence. We're keeping an eye on shares of Zeekr Intelligent Technology Holding. That is the high-end electric car brand under Geely Holding Group. They are higher after an expanded IPO that is the biggest American listing by a China-based company since 2021. Zeekr right now up by 30.6%. Again, recapping, stocks mixed. S&P higher, though, up 9, on track for a winning week, up now by about 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
That's right, everybody. Check the calendar, man, because Mother's Day this weekend.
I know, it's so bad.
Did you forget?
No,
You've
I
been
didn't forget. I'm
traveling?
actually
Okay.
traveling this weekend.
Are you?
Yeah.
Oh, that's right. You're
Yeah.
going to be away.
Yeah, I'm going away. I'm going to...
Are you going to go spend time with Mom?
No, I'm
Nice.
not.
Are you actually going to go spend time with
My wife? No, I'm not. It's bad. It's very, very bad.
Christina? We got to help him out here.
I'm like,
All right.
I was actually, as I was preparing this segment, I was like, is it too late for me to call Christina and get some flowers shipped to Brooklyn? I don't know. I don't think it is.
All right, Christina Stemble is back with us. She's founder and CEO of Farm Girl Flowers. She joins us from, it looks like gorgeous where you are, Gig Harbor, Washington, just outside of Seattle. So good to have you back with us. It is the Super Bowl of the flower industry. Tell us how important, just remind our folks how important this day is for you guys.
Yes, thanks for having me back, Carol and Tim. And Tim, we got to talk after this.
Yeah, I think so.
Wife and Mom. We did just sell out 15 minutes ago. I might be able to make an exception, but this is definitely our Super Bowl, we like to call it, of our year. We do more revenue and more profit in this month than any other month of the year by a significant amount. I think I talked about at Valentine's Day with you. We do Mother's Day is, even more important than Valentine's Day, which really surprises people. We do usually double the revenue, but significantly, sometimes 3 to 4 times more in profit than Valentine's Day because flowers are, better priced around Mother's Day because it's not winter and there's less storms for redeliveries and things like that.
So it costs you less to get the flowers, but the prices are the same for consumers, or is there a little bit of wiggle room?
Yeah, there's a little wiggle room. We can get more varieties now, so we can offer different price points. So some flowers like peonies are still super high priced. We pay usually double before Mother's Day what we'll pay after Mother's Day for the same stems. 1 week makes a huge difference.
Wow.
Supply and demand, right at its best.
My
but we can get
favorite
more
flower.
varieties that are peonies. Is your favorite flower?
Totally.
Yeah. We told our consumers 92% of them say peonies are their favorite flower.
I used to grow them. My mom, my grandmother, they're just incredible flowers. I have a statistic for everybody. Consumers are expected to spend $3.2 billion on flowers, while spending on greeting cards is expected to reach $1.1 billion. More money is spent for moms on Mother's Day than dads on Father's Day. That's a lot.
Sounds good to me.
Christina,
It's fine.
What we love is you kind of make the sausage for us a little bit, or tell us what's involved in the flower business. It's not so easy. It looks so beautiful. You get flowers and you're like, that was easy. It's not always easy, though.
No, perishability is so hard. I wish I would have known that back in 2010 when I started Farm Girl. It's so much harder. I wish, I constantly talk about, I wish we sold sweaters so we could even put them on sale in June. But we can't. We have to guess a full year in advance on what consumer spending is going to be the next year. And as you're just talking about, the markets right now, we have no idea what environmental conditions will be coming into play. This year, most direct-to-consumer businesses are really hurting, and so we're trying to figure out what should our goal be, what should our projections be, but we have to do that so far in advance. So for this year, we were playing it safe, and thankfully, because we're bootstrapped, we can do that. We don't have to show huge growth numbers for our investors and board. So I'm so thankful and grateful for that. So we were just I went into this holiday just saying, if we have a flat holiday, I said this to my team, if we have a flat holiday, I'm going to count that as successful. And we did have a better holiday than last year. So we're definitely counting our blessings right now, but it is such a risk. We always feel like we're standing at a craps table rolling dice when we're putting in those peony orders, 9 months in advance sometimes.
Yeah.
We don't know how Mother Nature is going to react. This year actually was the first year in 20 years that we had domestic peonies in time for Mother's Day.
Why is that? Just because of the warm weather we've had?
Yes. Yeah, because with the warm weather, it made them pop earlier. Usually they come on the week after Mother's Day. But that definitely threw a wrench in things because domestic peonies are better than shipping them in from Europe and other locations, but we'd already placed orders further away. So then it's trying to figure out like, how can we also incorporate some domestic peonies in since we can get them this year very last minute. So
how do you compete with the bigger players on this, Christina? Because let's say, you know, is 1-800-Flowers having the same challenges that you have, for example, or are they able to mitigate it more because of their scale?
Both. I think they have some of the same challenges that are, you know, Mother Nature related or shipping partner related. We, you know, I talk to our competitors often, and you know, we complain about, you know, the shipping delays and things like that that we're all trying to figure out last minute together. You know, like, you know, for our companies. We're not unique in that way. 1-800-Flowers also has those same issues. You know, they don't have their own planes delivering all their flowers, but they do have better, you know, buying power than us. So I'm sure their flower costs are significantly cheaper than us, and they get probably first right refusal on a lot of them as well. So we don't, you know, we'll never be able to compete unless we're, you know, doing hundreds and hundreds of millions of dollars. I think they did 2.16 billion company-wide last year. So we're not that scale. But we have some of the same issues and some different ones.
Well, and I also do think about, you know, I'm curious, I want to get your take on how the consumer is doing, because I do think when it's something like Mother's Day, like we don't skimp typically, but I do wonder, but sometimes there are years that are tougher and you're like, I'm still going to do something, but maybe not as much. So give us an idea of what you're seeing in consumer buying trends for the holiday, maybe more broadly as well.
Yeah, we have found over many years of research on this that people spend more on their lovers than their mothers. So they actually spend way more on Valentine's Day than they do Mother's Day, maybe because they're buying for two of them. You know, they might be buying for a mother-in-law and a mother. So we typically do some lower price point options for Mother's Day, more so than we do for Valentine's Day. And we thought that would be the case this holiday. We, you know, thought that people would be going, because the economic climate right now, we thought that lower priced options would be the first to go. But we were wrong that way. We had a lot more people spending more than we anticipated this holiday. That was great, but also bad because we didn't plan for that. So we had a lot more smaller options that were available on our site later, while the bigger ones sold out quickly.
Wow, that's really interesting to hear.
Yeah. Right, because if something changes last minute, you've already had your orders in, right? You can't just like call up, I don't know, Costco and say, hey, I need, right? Like that's not how it works in your business.
Yeah, we're very flexible. So that's something that we are different than the big guys.
Okay.
We're more adaptable than any other company, I think, at our scale in flowers. We're told that by our partners, and we all use kind of the same partners. We change things quickly. We'll sometimes, if, you know, one of our partners will call us, one of our farms will call us and say that they have, you know, a huge flush of something, we'll be like, okay, no problem. We'll take a photo of it that day with our cell phone. We'll put it on the site and we'll be selling it by tomorrow. Where our bigger competitors plan way further out than we do and can't kind of adapt to that. So I really like that about our company. We try to stay agile that way.
Hey, Christina, one of the things that we love just about talking to you is how candid you are when it comes to not just the successes that you've had, but also the challenges that you had, especially through COVID and what you saw post-COVID as well. So just give us an update on how the company is doing and how you guys are doing.
Thanks. Yeah, I just tell you straight. I think it's our most people wouldn't say that they consider a flat year a success. You know, I went into this year with our team knowing it was going to be a hard year, and it has been. It's definitely been more challenging. You know, so I kept our expectations really low. Like flat, we'll be happy if we do flat to last year. Really focus on profitability. Everybody's kind of gotten into the game of, you know, having to over discount everything, and then they lose money. And a lot of our competitors, I think, might be in that boat a little bit, spending too much on marketing dollar. Oh, it costs so much to acquire a customer now. So we've just decided, like I said earlier, we can do this because I don't have to report into a board or investors, that we're just going to stay small if we need to, stay flat to last year. We'll even go down if we need to from last year, although thankfully we haven't had to do that yet this year. But really focus on making that bottom line on the spreadsheet black, so we can stay in this long term. So, you know, if we need to be smaller for the next, you know, 2 or 3 years until the economy comes back, we can do that and make it through.
All right. Do I have to send you flowers soon because you're gonna maybe sell, or are you gonna still go it alone?
Probably still go it alone. I did think, I never thought I'd be 14 years in still talking to you about flower business, because I thought I would have sold by 10.
It's duration.
By year 10.
Yeah.
Yeah, but I've changed my mindset a lot. I think that we don't talk enough about, it's being a long-term sustainable business, and that's a success.
Yeah.
And so it changed my mindset to be that. We can provide great jobs, tax dollars, things like that.
I got to tell you, I did an interview with the administrator of the Small Business Administration, Isabel Guzman, at Milken, and one of the big things we talked about was viability of small businesses. It's tough. So 14 years and counting, you should feel pretty good about that. Always great to check in with you. Happy Mother's Day, or ahead of Happy Mother's Day. Yeah, good stuff. Christina, thank you so much. Christina Stembel, founder and CEO of Farm Girl Flowers. I always like talking with her.
Yeah, and reminder, everybody, get the Mother's Day stuff done.
Reminder,
sooner
Tim.
than later. Hey, let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. About 110,000 people have fled the city of Rafah in anticipation of an expansion of fighting between Israel and Hamas. The UN's Georgios Petropoulos says heavy fighting has made aid crossings inaccessible and food and fuel supplies critically low. And he says they're asking the Israeli government to reopen at least one crossing.
The largest impediment to our activities is that every single crossing into Rafah government in South Gaza is closed and remains so. The closure, especially of Rafah Crossing and Kerem Abu Salem, has severed access for us to fuel, to supplies, and the movement of humanitarian staff. It's also affected the movement of any civilians that could go out or medical evacuation.
And the UN says the World Food Program will run out of food for distribution in southern Gaza by tomorrow unless more aid arrives. Police cleared a pro-Palestinian encampment on the campus of MIT. Officers moved in early this morning and surrounded the perimeter, taking a few people into custody. Quinn Perrion is a student there and an organizer with MIT's Jews for Ceasefire, and he says they were expecting the police, but that it won't stop them from calling on MIT to cut financial and research ties with Israel.
This is not in any way going to diminish the movement. We're stronger than ever. We've seen that MIT will do anything, even threaten the well-being of its own students, over divesting from this ongoing genocide.
Perrion says he resents those calling for the support of the Palestinian people anti-Semitism. A severe solar storm this weekend threatens to trigger blackouts, disrupt navigation systems, and knock out high-frequency radios around the world. It starts tonight, lasts through Sunday. This is the first time since January of 2005 the U.S. Space Weather Prediction Center has issued a G4 geomagnetic storm watch, the second highest on a 5-step scale. Global news 24 hours a day and whenever you want it with Bloomberg News Now. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ, both Dow and S&P higher right now. 20 minutes to go ahead of the closing bell. NASDAQ, though, in the red. Little change. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in a quiet tape today with the Dow currently up 152 points. S&Ps are higher by 10, but NASDAQ is still lower by 3. The U.S. 10-year yield jumped to 4.5%. Gold is up 20. Oil is also in the green, but Bitcoin is lower by 3%. Among the main 11 S&P sectors, leaders were consumer staples and the financials. Consumer discretionary and energy were under pressure. And leaders to the upside in the Dow, McDonald's and 3M, while Nike fell 2.6% and led to the downside. After earnings, Akamai fell 11%. And in the tech space, Google spiked intraday after Altman said that Monday's OpenAI demo is not a search engine. Wrapping things up, Chinese EV maker Zeekr opened at $26 a share. The IPO was priced at $21. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg. Type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Bellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Not like Tim and I are counting or anything, but we've got about 18 minutes left until we wrap up the trading day.
That's math for you. Look at that.
It's been a packed week, a good week. Feel like we've really picked up on some trends, whether it's in the technology world or the investment world. So let's get to it because it's a great backdrop for us to dig into it all with Alan Zafran, founding partner and co-CEO at IEQ Capital, joining us from Foster City, California, just south of San Francisco. We were just there.
Yeah, really hot day yesterday, Alan.
Yes,
kind of unseasonably
beautiful.
warm in your neck of the woods. How is it today?
Loving it today. Sunny and warm. It's fantastic. Couldn't be better. It's why we pay the high taxes out here.
Yeah, I was going to say, sounds like a day that ends in Y in California. Carol pays high taxes in New Jersey, but doesn't have the same weather. That's weird.
Yeah, it's a little yicky.
Yeah.
January, February. Still kind of now.
Months that end in Y, yeah.
All right, so what do you make of the month of May? Here we are. It used to be what? Sell in May, go away. And maybe, I don't know, it hasn't happened yet. But we are seeing some upward momentum on the equity side of things here in May. Does it stick for you, Alan?
It sticks for me as long as interest rates don't get too high. And I don't know where the trigger is. Maybe it's a 10-year yield over 5%. But I think what's happened, it's fascinating this year. Everyone's been worried about the Fed's going to cut rates, so it won't cut rates. Oh my gosh, I have to reprice my models. But stocks keep going up anyway. And I think the lesson learned is the economy isn't as interest rate sensitive as it used to be. And there was so much money thrown at corporations and individuals through COVID that it has a lot of pent up cash on the sidelines ready to buy any asset at any drop. And that's, I think, been the story. And I think it's going to stick through the balance of this year unless we get rate shocks meaningfully higher. I think that we are going to keep working this way, grinding our way higher.
All right, so meaningful higher, like you said, up above 5%. I think you said on the 10-year. Was that what you said? Because it's interesting coming back from milk, and most folks were like, if we go up a little bit, if we go down a little bit in terms of what the Fed does, it's really not going to impact my investment decision. So it has to be something more than that, in your view.
Well, it does. Let's take the economy, okay? On an interest rate sensitivity front, any company or individual who could refinance their balance sheet did when rates were really low through COVID. So as a fact, 40% of homeowners in America do not have a mortgage, and 95% of the mortgages are 30-year fixed. So the notion that rates going up is going to impair people's ability to pay their mortgage is kind of flawed. And a lot of the purchases today are software. It's intangibles. It's not capital leases tied to equipment. So this notion that interest rates are driving behavior, it's not nearly the way it used to be long ago. And then you take into account everybody has already refinanced, and there's still a tremendous amount of money sitting in CDs and treasury bills and money market funds, all sitting and waiting on asset drops to make purchases of assets. So no matter whether you're talking stocks, bonds, even real estate, buyers are ready to buy when and if they feel that prices are at attractive points of purchase. And that's why I think we're in this funny situation that we can watch the Fed all we want. I don't know if it matters that much.
Hey, Alan, one thing I wanted to talk to you about that was really interesting in the notes that you sent to us ahead of time. Thanks as always for doing that. Is you're bullish when it comes to private equity right now. And I think that's a little bit contrarian, especially when it comes to some of the articles that we've seen about private equity in a higher rate environment. We have a Bloomberg opinion piece. It's a video. It's great by Nir Kesar that's just out this week. And it's all about the concerns of private equity in a high rate environment. The idea that there aren't many deals to be had. There aren't many businesses to be bought. The leverage that was typically used in a low interest rate environment is so much more difficult to do nowadays. Why do you think private equity is an opportunity for you and your clients?
Well, of course, it begins on your starting point. But now if you're in a world where the interest rates at which we're starting to place valuations on businesses are higher, that means the discount rate at which I use to discount future cash flows and pushing it back to a present price creates the purchase price to be more attractive or lower. And so I think that, coupled with the fact that bank lending is less available than it used to be, the demise of First Republic Bank, Silicon Valley Bank, and others, has it made it more difficult for business owners to get conventional borrowing. I think there are opportunities for craftful individuals that work at private equity firms who can actually source access to buying ownership stakes in private companies for the right price. There are some incredibly attractive businesses, and in the absence of conventional bank lending, their equity isn't quite as expensive relative to debt as it once was. So I think it's an interesting time to be a buyer of private companies.
Well, that's what, it's interesting at Milken, we talked about that the buyers and sellers in terms of price are coming much closer together, and that's been a big disconnect, and kind of really the sellers are having a reality check of like, okay, here's what we really need to do to maybe have some kind of deal actually happen. Having said that, when I think about the broader investing landscape, why is kind of focusing on the PE area so important to you? Is it because you think there's going to be IPOs? Like, what, more broadly, why is that so important in terms of the broader investment landscape?
Well, I just think in the big picture, private equity is one of many different arrays in which to be invested. So you should always be incredibly well diversified. Cash, bonds, stocks publicly, let alone potentially, if you're a qualified purchaser or an accredited investor getting some private equity exposure or other forms of risk. Public equities have historically generated higher returns than public equities, but it's come along with greater volatility, and there's a greater degree of risk that you end up in the right private equity fund. So you got to be careful about that. But if you think you have access to the right manager and you have a long enough time frame for an investment horizon, now's not a bad time to be beginning to look at that as a potential asset class to put a small portion of your capital.
Accredited investors, yeah, exactly. Although they don't all PE, private credit as well, would love to kind of maybe even open it up more widely.
I think you talked a little bit about that at Milken.
Yeah.
Yeah, and we talked about that before, Carolyn.
Yeah.
We actually think private credit is a very attractive asset class because private credit is generally priced as a floating rate plus a spread. So today's floating rate, the structured overnight finance rate, is where the Fed funds basically is at 5.5%. If you throw another 7% on top of that in order to get a loan, you're making loans at 12%.
What do you make of the kind of wall of debt, corporate debt, that's going to be facing the markets, probably starting, obviously next year and then out into 2026 and so on and so forth, the implications of that, especially as companies, private equity or other, potentially have to refinance that debt at much higher rates. Do you anticipate a wave of defaults? And just got about 30 seconds left here.
I think we'll have a slightly elevated amount of defaults, but I think managers that are prudent were well in advance could identify the companies that have those debt maturities that they'll have to be refinanced. And if you're sitting things like private credit, which are floating rate short-term loans, they don't face the debt problems that fixed rate corporate borrowers faced.
All right, going to leave it on that note. Hey, listen, thank you so much. Alan, really appreciate it. Alan Zaffron, founding partner and co-CEO at IEQ Capital, joining us, of course, there from Foster City, California.
Sunny Foster City.
It sounds pretty gorgeous there.
California.
Interesting, yeah. Always a smart perspective, and especially on a week where we see certainly bullish sentiment on the equity side of things, but making some really important points when it comes to the private equity universe, private credit, and how it plays into more broadly. All right, folks, we've got the close coming your way in just about 10 minutes. Stick around. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. McDonald's is looking to launch a $5 meal deal in the U.S. that the burger chain is betting can lure penny-pinching consumers back in. A source says the deal could include a McChicken or a McDouble along with fries and a drink. You'll recall on the company's first quarter earnings call that CEO said McDonald's had to be laser focused on affordability given how price-weary diners have become. McDonald's shares up today by 2.6%. Apple will deliver some of its upcoming AI features this year via data centers equipped with its own in-house processors, all part of a sweeping effort to infuse its devices with AI capabilities. Dan Ives is with Wedbush Securities.
But I think the mystery and the popcorn moment, that's going to be revealed at WWDC next month by Cook. I think it's going to start what I really view as probably the most important event for Apple in a decade, because it's unveiling AI on services, what I believe is going to be a new AI app store. And the start of it, and then what's going to be built into iPhone 16 from an LLM perspective.
Dan Ives of Wedbush. LLM, by the way, shorthand for large language model. The move is all part of Apple's much anticipated push into generative artificial intelligence. That is the technology behind ChatGPT and other popular tools. Apple right now down 0.8%. Zeekr Intelligent Technology Holding, that is the high-end electric car brand under Geely Holding Group, are moving higher in their first day of trading. Right now, the stock is at 27.41, showing a gain. First day of trading there again, up by 30.5%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, just under 5 minutes left in today's trading session. Carol Master along with Tim Stenivek live here on Bloomberg Business Week. And yeah, we're way off our highs of the session. Charlie, of course, breaking down the trade there. But we're still looking at a week that is overall higher. I'm just going to pull it up on the Bloomberg. We're going to get ready to head over to our TV colleagues. We'll talk about the close today and for the week. But we're up almost 2% on the S&P 500. So that would be 3 weeks of gains. So certainly an upward trend here in the month of May. So we'll see, whether it continues. What?
You were fresh back from Milken / Bloomberg Tech Summit in San Francisco.
Yes.
How would you, we were there together in 2021. We were there together in 2022. 2021 was all about post-pandemic, like everyone getting back together for the first time. 2022 was...
And the Russia-Ukraine war had just started.
Not 2021, 2022 it had.
2022,
then we would go back a few months
Yes.
later, and then it's like, okay, Russia-Ukraine war had started.
Yes.
The concern was about a recession in Europe.
Absolutely.
What was the vibe this year?
There was a lot of optimism. Well, first of all, it was packed. There were so many different people.
How
and
can
they
it be
said,
more packed than it's been? It was.
Well,
it just.
They actually, I think, said attendance was up. I can't remember the
I
numbers.
don't know how they
but
have room for
they
more
had
people.
They had a lot of high-profile speakers. We talked about Elon Musk. Bill Clinton was there. David Beckham was there. Magic Johnson was there. I mean, it was on Monday. You're right. Like that first day, you're always kind of, bumping into people. But it was really, really intense. Optimism. A lot of optimism about the markets. Very different from the last 2 years.
I just want to set for people who haven't been there, I just want to set the tone a little bit.
Yeah.
A friend of mine got back from there, and I heard that he just inadvertently at one of these meetings sat next to Rupert Murdoch. That's what happens at Milken.
Yeah.
It's like you can look to your left, look to your right, and you're sitting next to, a billionaire.
There's
That's who's there.
It's celebrities who are there just kind of walking around. There's people, healthcare, wellness is always a big part. Government is always a big part. So you'll see government leaders too, that they kind of come in, come out. But that's the kind of event. And there's side conversations having, there's invite only conversations having, and then there's kind of some of the big names in the grand ballroom that are happening. So, but I do feel like optimism, which always makes me a little cautious when people are really optimistic.
If everybody's saying the same thing, right?
But I will say that there were a lot of caveats, especially when it comes to geopolitical, politics in general, not forgetting that we've got wars around the world. So, yeah, if you missed any of our coverage, check. It's in our podcast, it's in our weekend show, and it's also on the Bloomberg. Right now, though, we're going to head over to our TV colleagues. That's because Beyond the Bell starts right now.
the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast. Everyone's back. Scarlett Fu here in the TV studio. Carol Masser and Tim Stenovic in the radio booth as we welcome our audiences across all of our platforms here on a somewhat tepid end to what is still going to be a positive week for U.S. stocks.
Yeah, and I think that's a significant point, and also that it's going to be up for 3 weeks in a row here, staying above that 5,200 point. Or Abigail Doolittle saying, that's really key. If we can go into the weekend staying above that, that's kind of key in terms of the upward trend momentum. So that is something we are certainly watching here. 52.25 right now on the S&P 500.
I think it's interesting to see continued momentum to the upside right now, continuing from last week. And we really had two events last week that prompted this. It was that Fed-friendly jobs report, and then also some optimism post the Fed meeting with Jay Powell. And then come this week, some positive earnings that basically everybody's saying, okay, well, I guess everything is awesome again.
Everything is awesome, and there's some data that may show as well that the economy is not holding up maybe as well as some of the numbers have indicated. Also, let's not forget,
everything is awesome.
Right,
again.
right. Let's not forget, too, that stock buybacks are really supporting the equity market. I mean, that $110 billion repurchasing plan from Apple makes up for half of the $200 billion that Bloomberg estimates S&P 500 companies have announced so far.
Interesting. I love me the Lego movie. Everything was awesome. But also we have to wonder too, was the sell-off and sell-off is extreme, was it just about tax selling? And if we're done with that, is a path of least resistance higher?
Yeah, it's interesting. I mean, there was an interesting call by the strategist over at JP Morgan, as well as over actually at Bloomberg Intelligence. Gina Martin Adams and her team kind of pointing out that once you get to the end of these earnings seasons, at least the large cap earnings seasons, you tend to see a bit of a pullback. It'll be interesting to see what happens over the next week here with the Dow Jones Industrial Average, at least on the day, holding on to gains, and on the week as well, we should point out. For the day, up about 0.3%, right around 39,500. The S&P at 5,222 to end the session, up about 9 points or 0.2%. The NASDAQ is going to go lower slightly on the day, only by about 5 points or less than 0.1%. And the Russell 2000 slightly lower here on the day by 0.7%.
All right, you mentioned earnings. Let's not forget that we've got NVIDIA, still a big one coming up May 22nd. Having said that, back to the big caps I go, including something like an NVIDIA. S&P 500, Scarlett, most names in the index higher today, 298 moving up, 199 to the downside, 6 unchanged.
And the modest gains in the Dow and the S&P 500 have translated into fairly modest moves for the 11 sector groups in the S&P 500 too. You look at the gainers and losers, pretty much evenly split. Staples, infotech, and financials are the leading gainers. And on the downside, you've got consumer discretionary, energy, and REITs.
Yeah, a fair amount of green in that pie. All right, let's get to some of the individual gainers. We've all been talking about it today. An IPO, the high electric car brand. We're talking about Zeekr, owned by Geely Holding, rising as much as 40%, just under 40% at its high today. An expanded IPO, the biggest U.S. listing by a Chinese-based company since 2021. So finishing the day, Zeekr up 34% in today's session. Novavax, really an outperformer at its highs today, guys, up almost 150%, finishing the day doubling, up 99%. Biggest one-day gain intraday in more than 15 years, forcing some short sellers betting against the stock to exit their positions at a loss. The company signed a $1.2 billion licensing agreement with Sanofi. It includes commercializing a combined COVID-19 and flu shot. I heard you, Alex, talking about it with Paul this morning. It was really interesting. The move did boost the stock that had plunged about 99% from its 2021 peak amid waning demand for its COVID vaccine. TSM, also Taiwan Semiconductor, guys, up about 4.5%. The company rallying after saw April sales jump 60% to $7.3 billion. As sustained AI demand was helped by the beginnings of a recovery in consumer electronics. That's always an important one to watch, certainly within the semi space. And Tim's like, Carol, you got to do Sweet Green. You like Sweet Green. It's up.
You love Sweet Green.
I do love Sweet Green. Up 34% in today's session. The company increasing its annual sales projection showed improved profitability as it seeks to expand its footprint. The company now anticipates same-store sales growth of as much as 6% from a prior expectation of 5% at most. So a lot of enthusiasm in that name.
People love those salads, even if they're $17.
I don't, but some people do.
Some people do. Yeah. Who has time for lunch anyway? That's what I want to know.
Ain't that the truth?
Okay, let's get to some of the decliners here. I want to start with Akamai, the worst performer on a percentage basis in the S&P 500, falling today by 11%. Akamai shares falling the most, going all the way back to 2017. It was an earnings story that's forecasted adjusted earnings per share for the second quarter missed the average analyst estimates. Analysts after earnings wrote about weakness in the company's CDN, its content delivery network business. And also want to talk about ticker DNA, Ginkgo Bioworks, down 17.3%. Shares fell the most ever today since going public back in 2021 after the company cut its revenue forecast for the full year following first quarter sales that fell short of expectations from Wall Street. We got a downgrade from William Blair after the results. Listen to this revenue figure that came in, $37.9 million. It was a 53% year-over-year decline for the company. Also fell short of the estimate of $46 million. It's probably a familiar name to a lot of people who follow Cathie Wood and ARK because her company is the second largest shareholder of Ginkgo Bioworks. And here's a new one. It's not just the EV companies that are going public today. Zeekr on the New York Stock Exchange today. There was another public debut. Oklo, it's a developer of advanced nuclear fuel systems, backed by Sam Altman. It slumped today. It's in its debut after merging with the Blank Check company. It's part of a wave of companies that are looking at new nuclear reactor technologies. Investors, not so hot on it today. Shares falling more than 50% today.
See, not everything is awesome all the time for everyone.
Well,
Okay.
I'm decliners, so I have to find the not awesome stuff every single day.
You got to get in there.
Yeah.
Not awesome if you're long treasuries. So you're seeing a little bit of a sell-off pretty much all across the curve in the treasury market. Yields up anywhere from 3 to 5 basis points, depending on where you look. But the significant part of this week, guys, was really the takedown that we saw for the 3-year, the 10-year, the 30-year. It got more awesome as you went on per duration. But I also feel like this just shows that Immerse, I was mentioning this earlier, I was talking to Joanne Shu, who does the data, and she was saying that consumers are really worried about higher rates. Not lower, not the same, higher rates.
All right. So speaking of higher rates and just inflationary concerns, we saw that consumer sentiment, Immerse, coming out with their numbers. U.S. consumer sentiment declining in early May to a 6-month low. Short-term inflation expectations, that was some of the concerns picking up, and also concerns about the job market. And so this story really resonates. And you think about, it's something, Romaine, I feel like we talked about at Milken, that a lot of people still feeling the inflation pinch out there. And McDonald's looking to launch a $5 meal that to really bring in some of those penny pinching consumers. I mean, for a lot of Americans, it's really kind of tough to make ends meet, no doubt about it.
Yeah, definitely. It's hard to do that. But can McDonald's actually do it, or can its franchisees do that in a place like California, where the minimum wage for fast food workers has gone up to $20 an hour? That's a big question.
Yeah, I mean, but also it's also what do you expect out of some of these companies, right? I mean, I think a lot of people look to McDonald's as a value, right? Or at least that's the perception of it. And how many times have we heard people complain about what it costs now to get a full meal at some of these fast food chains, not just McDonald's, but some of the others. So maybe it works to their advantage. I don't know. But to Scarlett's point, too, I mean, you obviously have to balance the labor costs, but we should point out, too, I mean, at least the McDonald's next door to us here at Bloomberg World headquarters, I don't think they have any labor there, right? I mean, they have people in the back cooking, but don't you order everything
Yeah,
from one of those,
you're the labor.
From those,
you're the customer.
Do I get a discount for that?
Your
Maybe they should
finger.
pay me $20.
Hey, like when you fly on an airplane these days, right?
I said to Tim, I go, man, I'm just going to start flying the plane soon because, man, I get the bags, I check myself in, I drop the bags. I mean, it's kind of getting a little crazy.
I don't want
almost
you
like a
flying the
normal
plane,
person,
Carol. No
Master.
offense.
I mean, I know you're so used to highfalutin stuff. You know, Carol took the private jet back. I had to fly coach.
I did not take the
Spirit
private
Airlines.
jet. I was delayed like everybody else.
that's how she got
Getting
back
in
so
at the wee hours.
Okay, guys, let's get to my favorite story of the day. This has no relationship to McDonald's. It is
a great story.
That amazing Apple iPad commercial. I don't know if you guys saw it.
Oh, yeah.
We were debating it in the editorial meeting today. Everyone had different feelings on it, but basically the idea is that you get this big crusher coming in and crushing everything that has to do with art and creativity in the last few decades and putting it all into an iPad. It just feels like this was too on the nose. Because that's what people are scared about with AI.
Where was the focus group?
That's what I want to know. I mean, I think the big story here is, first of all, Apple has come out and apologized for this about 48 hours. Tim Cook still has it on his Twitter, X. But if you go and look at the responses to his tweet,
No question, I think it's fair to say Apple missed the mark when it came to this ad. I want to know how it got approved, who signed off on it, because
someone's kid watches on Instagram, watches the hydraulic press videos on Instagram, and probably was like, "These."
I follow the hydraulic press on Instagram.
And you still didn't get it. Okay,
but I don't have the idea of like crushing all history of human
Correct.
creativity and then replacing it with an iPad.
Right. It's one thing to
just
crush gummy bears. It's another thing to crush music.
Exactly.
And, yeah, photography.
But it's so
and
not
art.
Apple. This is so not Apple.
Where's the meeting? Like they were
Isn't it?
done with it, they showed it, and everybody's like high-fiving. Yeah.
Although
let's
I
get
guess
this
you could
one
say
out.
it's the same company that made us all listen to U2, as Dave Lee pointed out in an editorial earlier this week.
You say this isn't Apple. Isn't this what they've been for now for a while?
I mean, it just seems like it missed the mark so much that they want to support creativity, right?
Well, I mean,
They do in their iPad.
Yeah.
They'll smush their computer, but you can do it in your iPad.
The
That's
piano
tough.
too.
I'm sorry.
R.I.P. And the guitar.
sorry.
Guitar is gone.
It's tough.
Metronome is gone.
Oh my
How many times do you think they did that commercial? How many takes did that require?
Exactly.
How many pianos
How many eyes,
died
right?
in the process?
Signing off. Yeah, let's put it. Let's push the button, let it out. All right. I'm sorry. Okay, that's a wrap. Guys, have a great weekend. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. Have a good and safe weekend, and a happy Mother's Day to all you moms out
You
there.
too, Carol.
Happy Mother's Day. We'll see you same time, same place on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenevec. Carol just back from this whirlwind trip to California. It included 5 days at Milken. And while money managers were inking deals, talking about AI, they were hanging on to Elon Musk's every word. At Milken in Beverly Hills, there was passionate debate over diversity taking place behind closed doors. I'm going to read right from this article.
Do it, because it's great. It's a great read.
Also, it's
incredible insight.
For much of the day, by far the most read story on the Bloomberg terminal.
Yeah.
In a small side room, roughly 40 people, including some of Wall Street's most senior executives of color, crowded around a rectangular array of tables for an invitation-only panel and confronted hedge fund manager Bill Ackman for his attacks on diversity, equity, and inclusion, according to 5 attendees.
All right, so right, Simone Foxman. She's Bloomberg News Equality Team reporter. She joins us from New York. Simone, so great. Congratulations. It's a story, as we said, was number one, I think, for most of the day here.
I've sent it to quite a few people already.
Yeah, it's really...
Thank you.
Just back from Milken, you know, I see the big ballrooms, those conversations you can go and listen to. There's a lot of stuff happening on the side. Walk us through this. And you were on the ground there.
Yeah, that's right. I mean, look, this was a packed event. I heard various numbers about how many people were there. It was in the thousands. And as you probably saw, Carol, people were kind of cramming shoulder to shoulder. Now, a lot of the business of Milken doesn't go on in the actual panel rooms. It goes on in sort of the tower upstairs where people kind of meet and do business as they look out over Beverly Hills. But there were also invite-only panels. So these were closed-to-press panels where people were talking some of the more controversial issues. And of course, one of those issues was DEI.
So talk a little bit about what happened in this particular case when it comes to Bill Ackman, and take a step back and tell us, you know, Bill Ackman for months now has been talking about DEI, writing pretty long essays on the platform formerly known as Twitter about his feelings when it comes to DEI, particularly on campus.
Yeah, and Bill Ackman is a Harvard Business School alum, and he's taken a very strong view that DEI is in some way responsible for some of the protests we're seeing on campus. I'm not telling you anything he hasn't said here very publicly. He thinks it kind of creates this oppressor-oppressed narrative. DEI officials, the DEI administrations of these universities, as he would term them, and he thinks that has ultimately put Jewish students on the side of the oppressor, and that's why that's helped contribute to incidents of anti-Semitism on campus. He's then since turned to that argument on DEI, taken it beyond just universities and said DEI in the workplace is also a negative thing, that it kind of creates what he calls an inherently racist and unfair system. Don't quote me exactly, but those are roughly his words. essentially that people who fall into a marginalized group are hired, they're not qualified for the position, everyone knows it, and that works badly. So what was happening here was a panel, especially on DEI. The invite-only panel was called the DEI Shakeup, Assessing Progress and Pushback, and it was Ackman and several other people, some senior executives of color at the likes of Texas Teachers, the chair of Texas Teachers, Jarvis Hollingsworth was a named panelist, Dina DiLorenzo, a woman who leads Guggenheim Investments. She's the president there. Don Peebles, who runs a real estate investment firm. And then John Hope Bryant, who is the head of a foundation focused on poverty. And really what happened in the room is just about everyone said, Bill, the message that you are telling here is really negative for diversity. Maybe you don't mean it, but this is negative and this is working against us.
Well, first of all, kudos that this actually came together and that people could address Bill Ackman about his view on this. And certainly, you know, it's America, you're allowed to have an opinion, and that he certainly has one. Having said that, I am curious about kind of what the tone was in the meeting and if they all came to some kind of, you know, thoughtful, I don't know, debate, if you will, on both sides.
Well, I want to reiterate, you know, we had to rely on the accounts of people who were in the room, as we were not allowed in there ourselves. So I, you know, heavily reported this out, spoke to a lot of attendees. I think in the end it was about half a dozen, if not more. The mood was, for the most part, with, you know, one small exception, really not very heated. It was respectful, but it was very passionate. And there were accusations made that Bill Ackman, this was a heated part, did not understand sort of the history of the civil rights movement, where black people and the Jewish people worked together. But mostly the message was, we think that you care about diversity, Bill, but we think that some of the things that you're saying, this anti-DEI stuff, is being used to undermine diversity efforts. And overall, they were really trying to get him to just kind of change the way he talks about it. There was some, Ray McGuire, who was the president of Lazard, was in the room, and he did kind of try and bring people together at the end. But ultimately, I'm not sure that anyone that I spoke to feels they truly, really changed Bill's mind or changed the way he's going to speak about it. Of course, we'll stay tuned.
That's exactly what I wanted to ask. I mean, is there any indication that this moves the needle and changes the way he thinks? And again, he, as you note in your piece, when you reached out to Bill Ackman for comment, he pointed to his post that he'd made on X over the last few months, where he'd said that he's written thousands of words that capture the nuance of the topic.
Look, he really thinks he's right here. And you know, for folks who are against the DEI, generally they point to some of the same specific things that can be found in workplaces. They point to some of the moves that companies made in the wake of the murder of George Floyd to try and express solidarity with people of color, but that maybe toed, if not crossed, the line of what's actually legal. For example, you cannot institute race-based quotas. In fact, there's very limited circumstances in which you can consider or even think about race at all when you're hiring people. So there are instances where companies went beyond the line. Of course, no one wants to also be known as like a DEI hire. So that said, you know, even if he's maybe heard some stuff here and heard a lot of this criticism, at least at the moment, it doesn't necessarily sound like he's changing his tune a whole lot. I mean, we'll see. You know, you sit on it, you think on it over the weekend, maybe something will come to pass.
Listen, Citadel founder Ken Griffin, as you write your story, said he'd continue withholding funds from Harvard until the school, quote, recommits itself to meritocracy in a very public and profound way. What I will say at Milken is, talking to the SBA administrator, talking to, I feel like, even venture capitalists at the Bloomberg Tech Summit, and also at Milken, you know, the idea that, you know, minority businesses, Black-owned, Latino businesses, they still don't get capital at the same level that white-owned startup or small businesses get. So, like, you do have to think about why these DEI initiatives have been put in place more broadly in society. But it's definitely a conversation of our times. But some great reporting and some great insight in terms of what goes on, not in the headlines at Milken necessarily, but on the sidelines. Very important.
Again, an exclusive story by our own Simone Foxman, and also one of the most read stories on the Bloomberg terminal for the past 24 hours.
Sorry I missed you on the ground, but you're obviously
you guys didn't even run into each other?
I didn't even know you were there, but it's that. Shift gears a little bit. We've talked a lot about China on this Friday, but we're going to get into another part of the world that's definitely troubled. Lots of questions. We're going to talk about Russia, maybe what could have been 3 decades ago if it chose a different path.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg, and up Friday, and up week as well. On the week, S&P 500 index advanced 1.85%. Today, the S&P was up 8 to 52.22, a gain today of just about 0.2%. Dow Industrial is up 0.3%, higher by 125 points. NASDAQ had a down Friday, falling less than 0.1%. 10-year 4.49%, a 2-year 4.86%. Spot gold up 0.7%, $23.63 the ounce, and West Texas Intermediate crude down 1.2%, $78.31 a barrel. Bitcoin today down 3.1%. 1%, 60,657 on Bitcoin. First day out for Zeekr. Shares of Zeekr Intelligent Technology Holding, that is the high-end electric car brand under Geely Holding Group, did advance today. Zeekr up 34.5% in its first day of trading. Recapping, stocks higher, winning week as well. S&P up 8, up 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stanovic live here on Bloomberg Business Week. So one of the great things about working in New York City, there are many great things about
You
working
get to
in
take
New
the
York
subway
City.
all the time?
Yeah, that's not one
Okay.
of them. Now, I do actually like the subway. You can get around pretty quickly. But it is the access you get to book parties that you get to go to. And that includes one for our next guest, who is a New York Times bestselling author, biographer, and a prolific writer of business management trends, of which he has joined us before to talk about. But he is out with his first work of fiction, written some 30 years ago, set in 1991 Moscow, a year when the Soviet Union was dissolved. And I have to say, in kind of reading again in for this, I was Googling that year and the Soviet Union. I kept coming up with a Metallica concert that played in Moscow for the first time ever. It was like 1.6 million people. I think it was an open-air concert. But it was a year in time when it seemed Moscow and the former Soviet Union would be on a very different front and a much more democratic track.
It was supposed to be the end of history.
Yeah, exactly. Or a new chapter.
Yeah.
Right? Journalist and author Kevin Maney joins us now in our Bloomberg Interactive Broker studio to talk about his first work of fiction. It's entitled Red Bottom Line. It is about the Soviet Union back in the 1990s, but again, a work of fiction. So nice to have you back on with us. How are you?
Good, yeah. This is great. I'm glad to be here.
Well, I'm really glad to have you here. And I know at the party, we talked about the book and stuff, but I want you to share with us, with our audience. It is your first work of fiction, written about 3 decades ago?
Right. Well, so the background story is that in the late 80s and early 90s, as the Soviet Union was disintegrating and the East Bloc and the Iron Curtain was coming down and all that stuff was happening, I was a reporter for USA Today, and I was covering that as a journalist. And so it was just one of these like once in a moment kind of history making kind of time when all these crazy stuff was happening all around me. And so I had this idea that, despite all the stories I'd written for the newspaper, everything, that I would use that as a setting for a novel. Now, I had never written a book before. At that point in time, I was 31 years old. And so I wrote a draft of this novel and then basically did nothing with it for 30 years.
But you held on to it.
But I held on to it. Well, so 30 years later, I actually was writing it when my daughter was first born. And so 30-some years later, she starts asking me about it. She says, you wrote that novel. Where is it? I'm going, like, I wrote it on a floppy disk on WordPerfect. Like, I'm never going to. And it turned out that I had a printout of it. Like, the printouts that were all, like, attached together with the holes on the sides and stuff. And I pulled out the printout, and I started reading it. And I'm going, like, wait, this is actually pretty good with a little work.
Why did it just collect dust on a floppy disk for 30 years, though? Like, what stopped you from pursuing it?
I didn't know anything about the book business. I sent it to a couple of editors just randomly, which was probably dumb. Didn't hear anything back, and I just kind of figured, well, all right, never mind. It's like probably not that good. But then I went on and started writing nonfiction books and had a lot of success. I have published 9 nonfiction books, all about business and biographies and things like that. So when I returned to it, I had more of a path and more of a knowledge of like how to get this thing published.
I think what's interesting is it takes us back to a different era, right? And I know at your book party we talked a little bit about it and stuff, but you think about, what our expectations were for a Russia moving forward, or what the new Soviet Union, or the dissolution, like they did their first presidential election. Like you just think about where it was and where it could have gone.
Well, that was, and when you read if you read the novel, because it's all real stuff that I experienced. I mean, it's basically a made-up story based on real facts of like, what was happening. And there was this optimism. There was a sense among like young people, and there's these young characters in the novel who are all into this idea of like creating businesses and getting into private enterprise and making contacts with Westerners and there was this incredible optimism that that something new was going to arise out of this. And
everybody felt that, right?
Yeah, everybody felt that. And U.S. business people were starting to go over. I ended up being present at the opening of the Moscow McDonald's.
I was going to talk about that because that's like so iconic from that era. And it was also iconic 2 years ago around this time. We talked a lot about it because when McDonald's exited the country in the wake of Russia's invasion of Ukraine, it brought back those images from the early 90s of people waiting in line to try the first Big Mac.
That's right, yeah. And we forget about it now, but it was this incredible cultural, geopolitical event that a McDonald's opened in Moscow. And there were I think there were 38,000 people that went the first day to that McDonald's because they were so hungry for, not hungry for burgers, but hungry for American stuff.
Well, it's funny. I have a conversation sometimes with my husband and we just say, what if we had decided rather than, especially if you look at the tensions between U.S. and China today, like if we decided, well, let's work with Russia and let's manufacture stuff there. Or like just if we had made as a world, generally decided to work more with Russia going forward. Like you just wonder how things might have played out differently.
Well, there wasn't, the transition time, there wasn't enough time for enough stuff to happen because pretty quickly, and I experienced this because I wasn't living there, but I was traveling there frequently.
Right.
And from the late 80s to around 1992, you could actually sense every trip that things were getting like more chaotic, more dangerous, more weird, because there's this sort of transitions of the government from Gorbachev to Yeltsin. Yeltsin was kind of a disaster. He started handing out whole industries to his friends, which is what the birth of the oligarchs was. And sort of mob activity was running half the economy. And so there was never a chance for this to really catch hold before the Russian society basically got sick of this and was welcoming somebody like Putin to come in and say, I'm going to actually create some order out of this chaos. And then it just all kind of fell apart in terms of being able to connect with the West.
What I think is so notable about the novel is that it paints a picture of what could have been in Russia and what many people in the early 1990s thought would actually happen. It's there collecting dust for 30 years before you go and publish it. And here you are publishing it, and it's the complete opposite of what ended up happening, as you just described.
Right.
So what was the moment you think it went wrong? Or went on a different path?
Yeah.
Was it Yeltsin?
It was under the Yeltsin administration, right. And, look, I never met Boris Yeltsin, but there's lots of reports about him. The guy was kind of a disaster as a leader, and it just let things sort of fall apart all around him. So what could have been set on a path of creating a more global Western-facing country just got derailed, and then and Putin wanted to take it in a completely different direction once he got aboard. But one of the points you were sort of alluding to here is that, if I had sat down to write this novel today, trying to rely on my memory or my notes or something I could never have captured all the details that I did. I think one of the even for me rereading it, one of the magical things about it is that I wrote it in the moment. So I was recalling all these sort of very fresh, tiny little details about what life was like for individual Russians or for somebody who was trying to run a factory and trying to transition to capitalism and all these things. And because I was writing it while I was there, those are captured. And then, all these years later, now I was just able to put a little bit more shine on them and make it a more holistic story that worked better.
What was that like when you picked it up again, right? Because you hadn't read it really in 30 years?
In 30 years.
And to go back there and be like, oh my God, this is exactly what was going on.
Well, what was fun for me was because I remembered very little of it. So it was almost like I was reading it for the first time, and I'm going, who is this guy that wrote this? It's
this thing is actually pretty good. It should be published.
No, but it's fascinating, right? It's like a window back into kind of exactly what you were experiencing.
Yeah. Oh, I wrote this little author's note in the beginning that before I thought of doing anything with it, I actually sent it to my daughter, and she's a journalist and editor herself. So she reads it, and she writes back to me and says, Dad, this is really good, but here I've got 2 pages of notes that you can make it better. But one of the things I thought was funny that she pointed out was sort of especially the main character, there's kind of this 90s sort of, the characters from Friends kind of language and snarkiness that are in the book that she said, like, is sort of inappropriate today, right? And like, so if I were writing that book today, like, it wouldn't even have that sort of language in it.
But it's emblematic of the time.
But it was emblematic of the time, right?
Yeah, like
right.
a time without iPhones and a time
Yeah.
where people had to actually, make plans to meet in certain places.
Right, and make jokes about things that nobody would want to make jokes about it anymore and stuff like that, right?
That's a really good point, right? It just, again, it's a snapshot in time, right? And it takes you back there and you realize, okay, the things that have changed and what is appropriate or not. I want to continue the conversation. We're going to do a little bit of news, Kevin, but the one thing I think about is, more broadly, is I think we think democracy is going to, of course, always win, and people are going to always want to move increasingly in that direction. We've thought it with China, right, with all the Western businesses moving in, and yet here we are, and it feels very, very different. So I want to maybe dig into that a little bit when we come back. We're going to continue with journalist and author Kevin Maney, New York Times best-selling author, I should point out. He's here in studio, but we're talking about his first work of fiction. It's entitled Red Bottom Line, again, taking us back to the Soviet Union in the late 80s and early 90s. So we'll continue in just a moment.
Hey, from New York to Washington, D.C. now for a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom. Hey, Amy.
Hi, Tim. About 110,000 people have fled the city of Rafah in anticipation of an expansion of fighting between Israel and Hamas. The UN's Georgios Petropoulos says heavy fighting has made aid crossings inaccessible and food and fuel supplies critically low. He says they are asking the Israeli government to reopen at least one crossing.
The biggest impediment to our activities is that every single crossing into Rafah government in South Gaza is closed and remains so. The closure, especially of Rafah Crossing and Kerem Salem, has severed access for us to fuel, to supplies, and the movement of humanitarian staff. It's also affected the movement of any civilians that could go out for medical evacuation.
The UN says the World Food Program will run out of food for distribution in southern Gaza by tomorrow unless more aid arrives. Now, jurors are gone for the day in Donald Trump's criminal hush money trial in New York. The judge is now looking over the scheduling. Prosecutors say they only expect to call 2 more witnesses, and they say they could rest their case by the end of next week. The prosecution's star witness is set to testify on Monday, former Trump lawyer Michael Cohen. After the jury left, the judge took up an issue related to former Trump Organization CFO Alan Weisselberg, who is currently serving a 5-month sentence for lying under oath. The prosecutors weren't planning to call Weisselberg, but Merchan, the judge, encouraged them to at least try to get him into court before trying to introduce evidence to explain why he's not there. 2 climate activists in their 80s are under arrest. They broke the glass that protects Britain's historic Magna Carta. The pair entered the British Library in London early this morning. They smashed the glass case and then glued themselves to the document's enclosure. The British Library says its security team intervened and the Magna Carta is undamaged. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris and this is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Winning week for the S&P 500 index. This week up 1.8%. Today the S&P gained 8 points, up by about 0.2%. Ending the week, heading into the weekend at 52.22. The Dow up 125, up by about 0.3%. NASDAQ fell 5 points today, down less than 0.1%. 10-year at 4.49%. The 2-year 4.86%. Spot gold today was up $17 the ounce to $23.63, up 0.7%. West Texas Intermediate crude down today by 1.3%, $78.26 for a barrel of West Texas Intermediate crude. Big day for Novavax stock, up 99%. Novavax surged after the company signed a $1.2 billion licensing agreement with Sanofi that includes commercializing a combined COVID-19 and a flu shot. Also, first day of trading for EV maker Zeekr Intelligent Technology. That is the high-end electric car brand under Zhejiang Geely Holding Group. That stock today was up by 34%. Again, recapping, S&P up a gain there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm back in the USSR. You don't know how lucky you are. Back in the
All right.
USSR.
Yeah, back in the USSR, and that is what we were talking about. Red Bottom Line, it's a new book by New York Times bestselling author and journalist Kevin Maney, his first work of fiction, although it was written about 30 years ago, and it takes you back to the Soviet Union in the 1990s. I kind of teased Kevin that this whole idea that we think democracy will prevail, and right now we feel like democracy is under attack globally. Give us some thoughts as you've been a journalist, just thinking about kind of what's going on in the world and how democracy continues to be tested. Because we think every time a market seems to open up its arms to it, we think, okay, it's just going to continue, and it's not the case. It wasn't certainly in the Soviet Union. It hasn't really been in China, even though a lot of Western companies moved in there, and we thought it would be a different outcome.
Yeah, I mean, I'm not a political expert. I'm more of a business expert. But
right.
My observation is.
But we thought like the business momentum into these countries, right, would kind of open.
I mean, you
it
mentioned
up.
McDonald's. That was like a seminal moment when it came to the former Soviet Union's embrace of capitalism.
Well, yes, but there was I think there was an interesting nuance to that. There was not so much about like this anticipation that Russia or China, when in this 90s, and we're going to be democratic, but there was this anticipation that there was going to be a legal system, a rule of law, a set of rules that everybody could play by that was not the whims of a dictator or something like that. That's what's really important to businesses, more than the fact that the people are going to vote for their leaders. The fact that the opposite of what's happening now in Russia or in China, where Xi is sort of taking all these sort of random actions of penalizing tech companies and and there's an uncertainty, and that uncertainty is what the business people don't want. Less than the idea of pure democracy.
Right. The rules change. It's funny that you say that. Where Zeekr, like having Chinese EV maker making its debut here in New York, an IPO. It was a big deal here. But part of the questioning with the executive.
Yeah, it was the CFO.
Right, about, Chinese government involvement. And that's part of the problem right now, right? Like we just don't know as investors, and we've seen certainly investors pull back when it comes to China overall of just not knowing, do the rules change, especially if you're investing in a business.
Yeah, and there was this, in the moment when the book is set, there was this rush into Russia by a lot of businesses, McDonald's and Procter & Gamble. There was one of the impetuses for me going over in the first place, in fact, was there was the Russian people had never seen much of anything of American products, and I learned about a convention that was going to happen where all these companies like Procter & Gamble and Unilever or whatever were just going to show stuff like toothpaste and deodorant, and in an enormous convention center where there was all these typical displays of all these little things, and just mobs of Russian citizens coming in and just with bags and trying to grab everything that they could. But all those companies wanted to go in because they were anticipating that that the economy was going to open up. There's going to be this hunger for Western-made products, but also that there was going to emerge out of this, the Gorbachev era, something that was more predictable and stable than, under the whims of the former Soviet premiers that could just basically, order anything to have happen, right? And that was what was important. And then it all fell apart when another sort of dictator-like figure came into power and shut that down.
You say you're not a political expert, you're more an expert in business, but I'm still going to ask you some questions about the politics because
you understand the
you absolutely
connectivity
understand
of it all.
We had on the program a couple of weeks ago David E. Sanger from the New York Times. He's got a new book out called New Cold Wars: China's Rise, Russia's Invasion, and America's Struggle to Defend the West. And he argues that the West didn't see coming post the collapse of the Soviet Union what we see today. We were busy fighting this war on terror, and in the meantime, China has the Belt and Road Initiative around the world, and Russia is coming back with its plans for an empire once again. And I'm wondering if you see any similarities now in 2024 to what we saw before the fall of the Soviet Union. Like if there is sort of a new kind of axis forming right now between Russia and China.
Well, I mean, it seems to me like the opposite of what was happening back then, right? I mean, there was this moment in time, and again, it's almost like it's so different now that we almost can't believe that it actually was happening. But if you grew up in the 1980s, there was this thing called the Iron Curtain, which was impenetrable, right? It was all those Eastern European countries. It was the Soviet Union. China was a closed nation, essentially, to the West. So there was this entire part of the world that wasn't even part of the global economy.
But is that happening again?
So, well, that seems to be where we're returning to.
Yeah, that's what I'm wondering.
So there was this moment in time that was mostly contained in the 1990s, really, between China and Russia, in the Deng Xiaoping era in China, when it seemed like all of that, this was the era when the idea of globalization was birthed, because there was this moment in time when it seemed like the whole world was going to play together. And if the whole world was going to play together, then there was this prospect for a kind of global peace that was never possible before. And in the late 1990s, that was sort of where we were. And the economies around the world were absolutely booming. And that was the whole .com boom in the U.S.
Right.
And the markets were going crazy. And to me, what marked the end of that was 9/11. Suddenly, it just was like this wake-up call that the world was not going to play together. And then we started to see things roll back in Russia and China through the 2010s. And we've kind of moved back to that era when there was this entire part of the world that was operating separately from the rest of us.
Yeah, it's kind of fascinating. I do feel like, some of the alliances, we've talked a lot about kind of the Middle East, and I'm lumping a lot in there, but just kind of the amount of money that's coming out of the Middle East and going into so many different areas, whether it's business, whether it's renewables, whether it's sports, and just that how countries, United States and others, are picking when to look away because of the money involved or the need for an alliance versus when to say, wait a minute, something's not here. It's just it's an interesting time, to say the least.
Yeah. And and there's another sort of sad thing about this too, is that
I just got about 40 seconds left.
Okay,
I'm not rushing you.
Because I've always written about technology.
Yeah.
And so one of the things I sought out in Moscow in the late 80s and early 90s were these little startups that were starting to bloom. And there were so many smart, incredibly talented software people in Russia at the time. And there was this seed of what could have been a global tech industry that came out of there.
Yeah.
That just got snuffed. And either the smart people that had those ambitions came to the U.S. And set up in Silicon Valley, which a lot of them did.
Right.
Or they just sort of disappeared, and that never materialized.
Right, like what could have been. Right, very different. Thank you so much. This was what I was hoping we could do with you. So thank you so much for finding time.
Great.
Really appreciate it.
Awesome.
Kevin Maney, we said New York Times best-selling journalist and author. His book, Red Bottom Line.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. First day of trading for Zeekr Intelligent Technology Holding. That is the high-end electric car brand under Zhejiang Geely Holding Group. It was up 35% after an expanded IPO that is the biggest listing by an American, actually the biggest American listing by a China-based company since 2021. Again, the shares today up by 35%. Taiwan semiconductor manufacturing saw April sales jump 60% to $7.3 billion as sustained artificial intelligence demand was helped by the beginnings of a recovery in consumer electronics. Mandeep Singh is a senior tech analyst with Bloomberg Intelligence.
To my mind, TSMC is the best proxy for chip demand across different sectors. So clearly they've told us, AI would be about low teens % of their overall revenue, which is a pull forward from their earlier forecast. But what this monthly number suggests is the autos and the smartphones chips demand, which was weak up until now, seem to be bottoming out. I mean, otherwise they wouldn't be reporting this kind of a bump.
Mandeep Singh of Bloomberg Intelligence, and today shares of Taiwan Semi up by 4.5%. McDonald's is looking to launch a $5 meal deal in the U.S. The burger chain is betting can lure penny-pinching consumers back in. A source says the deal could include a McChicken or McDouble, along with fries and a drink. On the company's first quarter earnings call, its CEO said McDonald's had to be laser-focused on affordability, given how price-weary diners have become. And today, McDonald's shares did gain by just about 2%. Those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, more Business Week coming up in just a moment. First up, though, let's get back to world and national news. We head back to D.C. and Amy Morris. Amy, all yours.
All right, thank you, Carol. Israel's war cabinet has reportedly signed off on expanding the military operation in Rafah. Con News is reporting the cabinet renewed the mandate they had been given previously to the Israeli negotiators to the ceasefire and hostage release talks. Sources tell Axios the cabinet approved a measured expansion that does not cross President Biden's red line. However, there is a third source who says the expansion may include actions that could be interpreted as crossing a line. Jurors are, of course, done for the day in Donald Trump's criminal hush money trial in New York. Prosecutors say they only expect to call 2 more witnesses, and they say they could rest their case by the end of next week. The prosecution's star witness is set to testify on Monday. Former Trump lawyer Michael Cohen set to testify about his role in arranging a $130,000 payment in 2016 to adult film actor Stormy Daniels. Court will only be in session 3 days next week, Monday, Tuesday, and Thursday. Former Trump advisor Steve Bannon has exhausted his appeals. A federal court has denied Bannon's appeal of his conviction for contempt of Congress. He has defied a House subpoena from the January 6th committee. While prosecutors had pushed for a 6-month sentence, he was ultimately sentenced to 4 months and issued a $6,500 fine. The latest ruling paves the way for Steve Bannon's prison sentence to get underway. And a severe solar storm is expected to hit Earth this weekend, starting tonight through Sunday. 5 eruptions from the sun's atmosphere that could trigger blackouts, disrupt navigation systems, and knock out high-frequency radios around the world. And this is only the second time in nearly 20 years the U.S. Space Weather Prediction Center issued a G4 geomagnetic storm watch. That is the second highest on a 5-step scale. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Messer and Tim Stenevec.
All right, Amy, thank you so much. Have a great weekend. Amy Morris there in D.C. Yeah, the weekend, it's coming up.
It's 3 minutes away for us. Coming up.
I call it Yabba Dabba Do time. Carol Master, Tim Stenevec, we're getting ready to wrap up here on Business Week. Let's not forget, though, it's been a busy week, some great interviews. You can find a lot on the Bloomberg terminal at Bloomberg.com, but we've also got our weekend show, 8 a.m. Wall Street time on Bloomberg Radio, also our podcast feed.
Is there still Wall Street time on Saturdays?
You know, all right, Paul Brennan. I heard that
Paul
through
Brennan
our
is
control
laughing.
room.
Paul Brennan is laughing because Wall Street for me is like 9:30 to 4, okay? And then Wall Street's closed Monday through Friday.
It's a really good point. I'm just into it because that's all we ever say around here. It's like, it's 9 a.m. Wall Street time. And it's like, no, it's actually Eastern time.
Yeah,
right?
well, you know.
Because at weekend time, I don't really care what time it is.
Speaking of Wall Street, you were pretty much at the Wall Street of the West at the Milken Institute Global
I was.
Conference last week. And you and Romaine spoke to quite a few people, and we feature a lot of those interviews in our weekend show.
You know, it's funny going through this list. You put it together, which is really great with the team here. Minneapolis Fed President Neil Kashkari, we had a great conversation with him. The Fed's inflation fight, he's really worried about the housing pressures and what that is, the cost of housing, if you will, or the cost of shelter housing, putting pressure on inflation. So that's certainly something we got into. Who else did we talk to?
You had Mark Lipschultz, the co-founder and co-CEO over at Blue Owl. You just mentioned Neil Kashkari. Really interesting interview that you had with State Street's Ron O'Hanley also.
Yeah, big picture, big market picture.
You talked crypto with Jeremy Allaire.
Yes, we did indeed. We also got some M&A take from some different players. I think over at Carlyle Group, CIO of infrastructure of Carlyle Group, Pooja Goyal, talking to her about what they're doing in terms of infrastructure investing.
I love the interview you guys had with Byron Allen, especially with everything happening with Paramount.
Yeah, it doesn't sound like they're still in there.
Yeah.